Richard, there's a hot new product in the market, SM REITs. What is the need for this market? What is the need for this product? And who will be interested in launching an SM REIT, given the historical performance of generally in REITs in India hasn't been that compelling?
Yeah, no, exactly. So real estate wasn't taking off, just about 4 REITs and 25 InvITs, even though InvITs came in much later.
Yeah.
You see, the big challenge was the minimum ticket size for REIT. You had to be 500 crores and above for a REIT, which many assets weren't. So REITs were really catering to the big ticket.
Your malls, your large
malls and large shopping complexes, and business centers.
Yeah.
Because developers didn't want to do strata sales, and they were like looking for this exit to a big investor.
Yeah.
And foreign investment might be limited, but now REITs with public money could actually buy these large assets. So that was the story of REITs. But SM REITs has got an interesting perspective to it.
So the minimum ticket size is 50 crores?
It's 50 crores. And I think what SEBI is now saying is that if you just have 50 crore of assets, you can raise public money and buy that 50 crore of assets. In fact, 50 crores can also be levered,
Yeah.
So up to 49% leverage is permitted.
Yeah.
So if you got 25 crores in your pocket and you have a bank ready to give you another 25 crores, you can buy 50 crores of assets and you can raise public money for that 25 crores, by the way, and make money on it. And it should just be completed and rent generating.
Yeah.
So which means that, you should think about some of the more exotic real estate classes. Like you should think about, all the chemist shops, by the way, which, the rentals in chemist shops in these smaller areas is way higher.
Yeah.
So you could think about chemist shops, you could think about hospital leaseback structures, school leaseback structures, student housing, all those kind of peripheral real estate, which was earlier unavailable. And by the way, unaccessible by foreign capital, now gets accessible also by foreign capital. And I'll explain you why. Usually the law is that foreign investors, are not permitted to invest in completed assets other than shopping malls or business centers.
Okay.
So if you are anything other than these two and you're a completed asset, we don't like foreign investors coming in. Because the principle is that why do we need you?
Yeah.
Okay.
We have enough
and
more real estate.
Right. So why we needed you was to give us technical know-how and all that. So once a mall is set up or something, we want you to come and take the business risk.
Yeah.
But in any other asset class, we don't want you. But through a REIT, you can invest under the FPI route in the REITs, in the units of a REIT, because it's a listed product. So what happens now is a REIT can now buy these small service departments, houses, etc. They can run an Airbnb effectively and manage it. Chemist shops, ATM machine slots, which are great, from a return perspective. And they can all be folded into a REIT, and now foreign investors can come and participate. So to my mind, that is very exciting.
Okay. So let's sort of break it down a little bit. Okay. If I want to launch a REIT, right, and I go in my neighborhood and I identify 5 shops that are generating good rental or that's giving good rental sort of income, do I, as a REIT launcher, so to speak, buying those shops and cashing the owner of that property out? No,
you got it right. So that's what it is.
Am I issuing REIT units, or is it a commercial decision?
No. I mean, see, you can issue REIT units, no problem. But if this was a proper REIT.
Okay.
Unfortunately, SM REIT is not allowing for swaps.
Okay.
So willy-nilly right now, there's going to be a proper... I'm not talking about tax right now. We'll come to tax in a bit.
Yeah.
This is just about a simple cash out. Okay. So if you're a third-party property manager, let's say you are Payaswini Capital. Now you found this great opportunity. You're like, okay, I have some funds of my own. So if you have, let's say 20 crore, and that's the requirement, by the way, 20 crore of net worth and 10 crore of liquid net worth, then you say, okay, let me buy these assets from whoever, these 10, 15 chemists, buy them, fold them into a REIT, and for this, naturally, for buying this value, you get money from the public investors. And now when you buy this, you are then leasing it back to the, to the chemist.
So my tenant remains the same.
Tenant remains the same.
Okay. So I've just, let's say, created an instrument which then I can sell to that many investors.
Correct. And then, by the way, again, just important point is, why should the chemist sell it to you? Because I think that's again an important point. Because a lot of people want to ease up their balance sheet. So there's locked up money, right? They're not getting, your shop might be 20 crores.
Yeah.
But you can't sell it.
Yeah.
So here the thing is, you've sold it to a REIT.
People will get exits.
You get 20 crores cash, and now you just keep paying small rent, So you get cash liquidity, which is big for them.
So great segue, Ruchir. So you said you rent, right? And this requirement is that it should be a revenue generating asset, right? Is there how much revenue? How many times in a year you're being able to lease that property?
And thank God SEBI didn't listen to this question when they were drafting it, because it just says revenue generating.
Yes.
So if you generate revenue, or you can promise that revenue is being generated for even a day, I think it's fine. There are no limits.
Okay.
I would have thought it might be good to just say, okay, there must be 3-year lock-in, 5-year lock-in, etc. But none of that has been prescribed, by the way.
Okay. Let's look at it. So you've looked at it from the person who's setting it up, maybe foreign investors who can now tap into a potentially new asset class in India. Let's look at it from the investors' point of view, domestic investors. Too much interest, no interest? How do you see it panning out?
No, so I think, I don't know if foreign investors will look at this product immediately because it's very new. But obviously, I think the return profile should attract. You see, the challenge with foreign investors has also been that the interest rates have been abnormally high in the US. And this is global capital, right? So if the US, if the US Treasury is competing with you, you have little to say. Okay. But
no product can match that.
No product can really match that, even with hedging costs and so on, so built up. But I think when there's 4%, 4.5% goes down to 1% the way it used to be, then I think these REIT products become really interesting. But
you have a ballpark based on conversations that yield that we can expect from this product?
So REITs historically have given about 9 to 12% on gross IRR basis. One shopping mall REIT, I believe, is given north of 20 odd percent. And I think that if you're doing these kind of products, I think your yield can be around. I'm not a banker, so I won't comment, but it can be the high teens, which can therefore get very attractive even in the current global kind of interest ecosystem.
Okay. There are also models that existed before this product came about of fractional ownership.
Yeah.
Those will get migrated to your mind?
Yeah, those will get migrated. In my mind, and I will be, I was speaking somewhere and I just told them that, long back we read this article on regulatory entrepreneurship, which means businesses that are working on the edge of law. They're not illegal entirely, but they are sort of not legal, right?
Yeah.
Like Uber.
Yeah.
You couldn't have a private taxi operating system without the approval of the New York taxi operators. It was illegal, and you couldn't Airbnb.
Yeah.
But they all became legal eventually. And I have always believed that fractional ownership was on the edge of being qualified as a collective investment scheme because it's offering assured return, pooling, and so on and so forth. And many of fractional ownership platforms were, by the way, held out to be CIS. So, but anyways, there's money, you keep making money, people also keep investing, and it's great. And I don't think SEBI was liking it. And so I think this was our own moment of regulatory entrepreneurship, where a product became so successful that SEBI said, okay, let's legitimize it.
Yeah.
And the idea is, I believe for SEBI to turn this from 50 crores to 30 crores to 20 crores, basically democratizing real estate. Smaller parcels of real estate will now be accessible to REITs, which also means it brings in transparency to millions and millions of square feet in India. And not just transparency, by the way, also access to foreign capital.
And also from an investor's point of view, right? This is the challenge has been that you need to put up capital to buy into the real estate.
Correct.
Physical real estate, a lot of capital, right? So it's breaking down into smaller sized bites.
So I mean, that's the idea of a REIT, right? You want to buy prime property in a prime area, want to benefit from appreciation.
Yeah.
And now REIT will do that for you. In fact, very, very colloquially, we call we refer to REIT and InvITs as bond proxies with equity kickers.
Yeah.
Because on the downside protection, they function like a bond.
Yeah.
Because they are protecting your downside. You have a pre-leased asset and all that.
Right.
So they're bond proxy. But shareholder perception of the asset can be higher. Certainly you have a boom in real estate value. The prices can go higher. So therefore, bond proxies with equity kickers.
Yeah.
It's a pity after all that some of the REITs and InvITs are actually trading a discount to NAV. Because Indians in India we still don't understand it quite well.
So Richard, this sounds like a beautiful product which has a lot of potential. Can you think of any dampeners that why this product might not work?
See, first dampener is this whole public issue thing.
Okay.
We have this crazy degree of overcautious approach to real estate. पता नहीं क्या हो जाएगा, value कहाँ से कहाँ पहुँच जाएगी. We are like, we are shit scared. So InvITs, we have no problem. InvITs can also be unlisted. They can be private listed, but real estate, it must be public listed. In fact, if at all, I would say that save the public. Make it private listed or unlisted if you really want to get this somewhere.
Yeah.
Okay. So that's the first challenge. Maybe that's why the REITs have been so blessed because you need to find those 200 people to subscribe to it. That's one. The second dampener is the taxes. Because some of these shops, etc., and some of these smaller real estate assets, they are not held through SPV structure. Which means that the seller will directly sell the asset, which means there will be a stamp duty. Which also means, by the way, that the income tax exemption on REIT swaps, which exempts transfer of real estate asset or in exchange of units, will not apply because that tax exemption only applies to exchange of SPV shares in place of in consideration of units. If you're transferring real estate directly, it won't work. And I don't think any state government is going to give you exemptions. So you are really left high and dry. Number one, paying stamp duty. Number two, paying capital gains tax.
So is it time for these people who want to exit and cash out to put their assets and start putting their assets into an SPV?
Yeah, maybe. But unfortunately, if they do it now, then again, transfer to an SPV is taxable. Okay. So either they are intelligent enough, set up an SPV, but how many individuals do it? If somebody wants to run a shop, like, will you do this? And I think the classic store can be like, Zepto and Blinkit are having those dark stores. 3,000 square feet, warehouses, nowhere, earning great interest, They can be so many asset classes. By the way, you also have cemetery REITs, because that's the most expensive portion of real estate. At times. So you can have whatever you want thrown in, So tax is one big challenge. Public listing is another big challenge. Governance sometimes tends to become another challenge because if you want to attract larger investors, you can't say that all of you will have the similar rights, which is a challenge with InvITs also. Because one person can have superior rights, but one person who's putting in, let's say, 10 million versus somebody who's just putting in 500,000, there's a big difference. But I think those are all manageable aspects. I just somewhere feel that if at all the framework can be turned into a private listed regime and some of these tax issues can be sorted because it then makes it very expensive, then I think it will be a great asset class.
Okay, all right. And that's the hope to make this subject more understandable. Thank you, Ruchir.